You mentioned the consumer. You have an expertise in e-commerce. I'm curious what you are seeing, as you look at a lot of the private companies you invest in that we don't have as much of a snapshot of because they are still private. Are you seeing this resilience of the consumer, continue to hold, or are cracks starting to form, as you look at what's going on with the macro picture, with the strikes, for example, or, the depletion of excess savings, or, student loan repayments, all the different factors that we talk about, but when you look on the aggregate, not quite an issue.
It's so fascinating to watch. I would argue I've been way too defensive for the past 2 years because you do watch this. I just moved to LA. You watch the compounding economic impact of the multiple strikes going on there. You watch the strikes happening up in Michigan. You talk about student loan repayments. There's so many compounding factors. We certainly see within some of our non-discretionary consumer companies, you certainly see a real trade towards value. And so, basket sizes may be staying flat, but unit volumes are coming way down. So consumers are trading down. They're trading down for value. They're still consuming. And then we've got discretionary companies in the portfolio where it's sort of illogical that consumers are still paying. But I think consumers are still relatively healthy and looking for fashion-oriented items on trend.
When you speak with those companies, are you advising them in any way to, prepare for some of these lag effects to ultimately transpire? Or are they kind of telling you, look, we think that this is going to be the trough and, we can handle it because of XYZ?
I think everyone's on high alert about inventory. We've had just massive supply chain shocks over the last couple of years. I know Brad talked about container pricing, just massive supply chain shocks that we all built up into trying to get to a consumer and are now depleting. So I think there continues to be a focus on how do we stay really lean from a balance sheet utilization standpoint. But this consumer is still telling us that we should be investing, and we're investing. So that's kind of yes and no is my answer.